Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, March 30th, and my name is Raleigh White, and I'm coming to you live from a nice sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, beginning with his midday market analysis and his updated stock watch list for the rest of the afternoon. He's also going to give us an introduction to the AlphaZone Pro. He's going to share with us why he created this incredible platform and how he likes to use it. He's also going to share with us what drives the key support and resistance levels and how he combines these levels with his homegrown oscillator. And finally, folks, he's going to share with us the different assets that you can trade with the AlphaZone Pro. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, the chat is open to everyone. So remember that we do have some ground rules. Always be kind and supportive in your posts. No political discussions allowed whatsoever. Keep the side conversations to a minimum between the few of you because all it does is really interferes with the bulk of us that are just trying to focus on the education and the information that Roger's sharing with us because after all, he's here to give us an edge in the markets and to help us all become much more consistent and confident in our trading activities. Now, for those of you that were with us this morning at 8 o'clock for Roger's pre-market briefing, you'll note that there were several catalysts on tap that we needed to be aware of today. Energy. We saw that West Texas crude was up 2% above $101, and associated energy stocks were benefiting from that. On the international front, we noted that Europe and the Shanghai markets were basically flat, but the Nikkei did come in down 2.8%. So kind of a negative tailwind coming into the US for us today. On the MAGS front, Meta and Microsoft were all up 1%. On the chip sector, Micron and Intel were up 1%. Crypto, we saw that Bitcoin was up 2%, and as a result, Coin was up 2%, as well as some other crypto-related stocks like Mara and MSTR. As far as materials are concerned, Alcoa was up a whopping 8%, based on the fact that there were some attacks on some aluminum factories in the Mideast that were shutting down their production. And finally, folks, as far as the Fed is concerned, pretty light day. We had the Dallas Fed manufacturing information coming out, and we also have Jerome Powell speaking today. Now, for those of you that are wondering, Raleigh, what's the value of these catalysts for us? Well, Roger's perspective is this. Anytime there's information that becomes known, that is either known or will become known during today's trading session, but may not yet be reflected in the markets, well, those are volatility flashpoints. And as far as they're concerned, then, if we're looking at trading any stocks that could be impacted by those volatility flashpoints, it gives us pause. Okay. And that's the reason why it's there. As far as Roger's pre-market stock watch list is concerned, you can see that he gave us 25 tickers today, 14 to the downside and 11 to the long side. Now, on the long side, you'll note that there were 1, 2, 3, 4 stocks that are underlined. And the reason I underline them is that when I was listening to Roger talk about them today, he mentioned specifically that these particular tickers are setting up pretty nicely. So from that standpoint, I like to give that an underline. He also said you got to be careful of longs today, folks, because once again, even though the market is giving us a little pre-market bounce, and I'll talk about this a little bit more, he's just not sure how viable that is. So to be careful here. Now, let's be clear as to what a stock watch list is concerned. In the morning, when Roger wakes up and he takes a look at stocks that might be setting up, that's what this is. They might be setting up. But from that standpoint, it doesn't mean that automatically take these shorts and take these longs. Far from it. What he's basically saying is that they're starting to look good. And if any of these tickers mature to the point that they meet his standards, more than likely he'll take that trade and then he'll communicate that in his trading pit or in another one of his premium alert services. Now, as far as Roger's pre-open thoughts were concerned, we did note that the futures were up nicely coming into the open, and Roger said, "Hey, maybe this is a sign that the markets are kind of assimilating what's going on in the war." Question mark, okay? We also noted that the put to call ratio remained unbalanced and heavily favoring puts, and he's hoping that's going to slide down and that call buyers are going to start to level things out. We also noted that the VIX was ticking a little bit lower from last Friday, but was still above the 30 level. And then looking at the SPY and the QQQ, just like last week, they remained below the the 200-day moving average, and MAGs were basically dragging things down. As far as trends are concerned, we note that the number of S&P 500 and NASDAQ 100 stocks that are above the 200-day moving average, only 45% of them are. And from Roger's standpoint, anytime there's less than 50% there, he says, hey guys, trend wise, we are in a bear market. As far as momentum is concerned, it's also bearish, with less than 15% of the S&P 500 and NQ100 stocks above the 20-day or the 1-month moving average, less than 15%. So as far as today is concerned, he says, look, folks, let's be cautious. First of all, it is Monday, and be careful if you're going to be trading before lunch, because Monday is typically where we see the liquidation and rebalancing going on, and it can be quite tricky to trade the markets. And we also typically will have news events. The other thing that he noticed is, look, guys, we're having a trend, but I'm wondering if this is a legitimate trend or is it a dead cat bounce? The reason why he focused on this is he said, look, guys, crude oil prices are moving higher. Now, if the market moves higher as crude oil prices are moving higher, well, that's an indication that we have a trend and potentially not a bounce. And he says we're not going to know for sure for at least another 24 to 48 hours. So, bottom line, don't trade big size, guys. I mean, the markets are just way too volatile. He also points out that options are expensive, and as always, while this war is going on, keep an eye on what crude oil and the VIX is doing, because it's the purest indicator, if you will, of how the war is being interpreted and absorbed by the markets. So we got a great group of people here, and the list is growing by the second. And I'm glad you guys are here, because Roger really does have a good agenda on tap for you today. He's going to begin with his midday market analysis, and then he's going to give us his updated stock watch list for this afternoon. He's then going to introduce us to the AlphaZone Pro, why he created it, and how he likes to use it. He's also going to talk about what drives the key levels of support and resistance, and how he combines these levels with his homegrown oscillator. And then he's going to share with us the different types of assets that you can trade with the AlphaZone Pro. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. Also, folks, remember, I have opened the chat to everyone, but we do have some ground rules. Always be kind and supportive. Please keep to the topic. No political discussions allowed whatsoever, and keep those side conversations to a minimum, because all it does is interfere with the rest of us that are trying to focus on the education and the information that Roger's sharing. Because after all, guys, he's here to give us an edge in the market and to help us all become much more consistent and confident in our trading activities. And with that, guys, let's say hi to Roger. Let's say hi to Matt. Welcome Monday, 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 Roger. I know that you were a bachelor this weekend.
I
So it
was a
was,
bachelor.
yeah, it was you in the menagerie.
Let me tell you something. It got so bad that if I'm going to tell you, I'm going to share some stuff with you guys. You're going to roll on. You're not. Well, some of you are not going to believe me, and some of you are just going to roll on the floor, and some of you are going to say you must something must be wrong with you. Okay, so my wife, okay, I don't do anything around the house. Okay. I mean, I literally come home, I walk the dogs a little bit, I eat, I watch TV, and I work. I don't do anything else. When I say I don't do anything else, I mean it. So, with that in mind, my wife's been leaving me a lot because she's been dealing with my kids. My daughter's going to be more likely than not going to she was in Virginia
William
um,
and Mary, right? Yeah.
Yes, Williamsburg, and she said it was absolutely amazing. She wants to take me there. I'm actually going to have to go there because I'm going to have to help her, my daughter move and all that other stuff. But so she was there. She came back home last night, but I was home Saturday all day and Sunday all day. So, okay, so you guys know I'm pretty good at analyzing the market. I have a pretty high IQ. I mean, I'm a functional human being. I do everything everybody else does. Okay, so I had to watch a video this on how to cut a cantaloupe. Okay, I'm not. See, I knew you were going to crack up. I had to. So I had to watch a video on how to. I'm not kidding. I'm not kidding. You can't make this up if you tried. So my wife, she's like, "What? You're watching videos? Oh, I can't be leaving you home alone. You're becoming too independent."
Oh my
So,
gosh, Rod.
so seriously, I had to watch. It got to a point where I wanted a video. I found a video online. There are videos how to cut a cantaloupe.
Oh, there's videos
Matt,
on
are you
everything.
cracking up?
Yeah, yeah.
I've never cut a cantaloupe in my life. And we had a cantaloupe, and I needed to eat a cantaloupe because that's what I eat for my breakfast. So I watched the video on how to cut. I found some really sharp knives. We do have some sharp knives.
That's a
So
start.
when I say that I'm useless when it comes to anything other than trading, I really do mean that. Okay, I really do mean that. So I see laughing hysteria. I said some people won't believe me, and some people are just going to laugh and crack up. But I watched a video on how to cut a cantaloupe. I'm very spoiled. My wife, she takes very good care of me.
You guys are a
But
great team. Let's put it that way.
we are. We work really really well together. And I mean, I'm not useless when it comes to things outside of the house. I'm actually pretty useful. But like when it comes to like domestic stuff, like don't ask me where the napkins are, or, because I'll be like I don't know where they are. They just appear magically here. I can boil water. I could do that, and I can toast bread, and I can heat up soup in the microwave.
Oh, you're set.
And I can make tea. I can make tea, not coffee. I mean, in a coffee, I can make the regular coffee, but I can't make coffee. And if you guys think that I'm joking with you, I swear to you, I am not. Okay, nobody would admit to something like that, except I'm serious. All right. So anyway, that was my weekend. It was a great weekend. I was really bored. I had nothing to do. I was analyzing the market to death, and I was cleaning my drawers. And watching some great shows. I'm watching this show called The Patriot from. It's on Amazon Prime. Great show. It's about the war.
It's quirky. It's quirky, but it's good.
It's a great show. Great show. So I'm watching that right now, having a great time. If you guys haven't seen it, it's called Patriot on Amazon Prime. All right, enough of that. Let me share my screen. I thought you guys would get a kick out of that,
Hey, we're just bearing our souls here.
Look, I mean, I thought it would be funny. I've heard of other guys. I've heard of other people being that way. Like I know Stanley Druckenmiller's that way. He's like, I can't tie my own shoes. Like I'm useless I know how it is. Okay, so the market is actually up right now, and it's defending the price action fairly well. Matt, you got out of that long?
Mm-hmm.
Okay, this is what I was talking about. You got a much better entry here. So as far as the volatility, let's just kind of look at everything. Let's just take a step back. I have a feeling, Raleigh, and I do not have any inside information, but I have a feeling the administration's going to start doing, really trying to quiet this market down. At least that's what they should be doing right now. We already had one thing happen this morning, and we know the president actually told us who he's negotiating with. I thought that was really important. Matt, now, not the name, but who is do we know what kind of like what group this is or anything like that?
Iran's parliament speaker.
Okay, parliament speaker. Okay, well, hopefully he has some pull, and now we know kind of who we're negotiating with, which is kind of good to know. Let's talk a little bit about this. as far as the stock market's concerned, let me just go to the stock market. The market is actually having an inside day today. Okay. Volatility is having an inside day. That's a very, very positive sign. Very, very, very positive sign. The fact that we couldn't really hold this area initially is not such a great sign, but market internals have been very, very positive actually here. We broke down, but we've been recovering this pretty well. Notice these bars, that's institutions right there. That's institutions. This is a mixed bag. You could see, look at the size. You see how they're not overlapping, how they're just going straight down, how they're bigger than these. This is overlap. This is barcoding right here. This is strong directional move. This you don't want to fade, okay? You don't want to fade this. This you could fade all day long. You got to know this you don't want to fade right here. This you don't want to fade. Moves like that, okay? Folks, this is basic price action, and it's really important for you guys to understand it, okay? This is a freight train. This is a bike, okay? All right. Most importantly, and what I think is really, really important is the fact that we're holding on and we're building a base, at least starting to build a base. And I'm hopeful that this is the low and we don't break lower. Now, there's going to be two ways this will play out. You see this green bar? That's my resistance right now. I drew this a while back. It's based on, that's my first level of resistance, and these are my support levels right here. I drew them over the week. As I said, I had a lot of time over the weekend. Right here. Right there. Right over here.
Right.
So you got based on this level, and this level right here. Okay, we got some staying power over here. But again, be careful. And I'm hoping we don't get there. I'm hoping that we come back here. Volatility is not breaking out. Now, one of the positive signs that we saw was this. That's the first sign of the market assimilating all of this. And I pointed this out this morning, folks. You see how crude oil is breaking it? You see how crude oil is breaking out?
Mm-hmm.
And volatility is not reacting to that. That's huge. That's huge. Believe it or not, you may not be seeing it yet, but that's a move in the right direction. Because if energy prices continue moving higher, but the stock market is not reacting to that anymore, that means that is not driving price. Something else very important. On Friday, the market was not driven by this right here or this. You see these 2 days right here? This is Meta. Look, you could see Meta right here. That's Meta. Okay? Meta is what caused it. Momentum levels actually were right here. Not too bad, Raleigh. They were actually here. You could see it. $587 versus 740 a week earlier. So you could see right here. You could see that momentum levels over here.
Yeah.
Right here were lower, stronger to the upside than they were right here.
Yeah.
So this right here, this last few days right here, this, if it wasn't for the mega caps, we would have been here. So in essence, the market started assimilating the war pretty well within its price right here, which is Thursday. So today is the third day. Today is the third day that it's assimilating it within its price. And you could see, I'm just kind of going back and forth between volatility. Volatility has not been breaking out. So if we can stay, we could stay within this level right here for a little while, we would be in pretty good shape. Okay? Could be right here in this level right here. So that's kind of where we're at. So I am cautiously optimistic. Now, what are the things I'm going to be watching out for? Okay. Well, number one, we don't want to see volatility break higher. We want the SPY to start curling up above this 642 level. We want it to go above 642. You know, this area. I'm not going to give you exact this area. We need back here. I wanted to get back here. And that would be a really good start. Now, the bad news. Here's the bad news. We're still below the 200-day moving average.
Mm-hmm.
This is like huge institutional selling pressure right here. So even if we come up here, we need to get here. If we get up here, it means nothing. For example, my friends, let me show you. And folks, this can really, really, really bite you in the booty. So let me explain. Let me show you. We go up, we go up, we go up, and then we come right back down. See? That's this right here. That's what I'm afraid of. You understand? That's what I'm afraid of. Because we're below the 200-day moving average. So this is what I'm talking about. Sorry. Right here. This is this. You understand? Does everybody understand what I'm saying? I don't have the chat open.
No, it makes all the sense in the world, Roger. And I think you were saying also this morning that the next 24 to 48 hours is going to be very telling.
Yes, it is going to be very telling. Well, that's going to be here. Let me just erase this. That's going to be telling for another reason. That's going to be telling. That's to see if whether this area holds or we go down here. That's the next 24, 48 hours. What I'm saying is, in the best case scenario, we come up here, and then the question becomes, so what I'm saying is, if everything works out the way I want it to, and everything starts working out great, we still have a huge question mark. We still have a huge question mark right here.
Yep.
This is going to be the big question right here. Mm-hmm. See, you can go up right now 3-4 days in a row, and it means absolutely nothing for the long-term picture. So you got to start loading up on stocks after we get here, or at least here, but not before that. That's not a good idea. And folks, if you think I'm going to not remember this, I'll remind you of it every day. But that's the big problem. So I'm pretty confident that we're going to bounce. I'm pretty confident. The administration is going to come out and say something. Trump doesn't want oil prices. It impacts on his when anything starts impacting on their credibility, on their political agenda, on whatever. Because you see, people are very political till it involves their pocketbooks. Then they don't care. You know, so market goes down another 5%. It's not about politics at that point. It's about when is this war going to come to an end? And everybody here is going, he's absolutely right. We've all seen it before a million times. So again, it's what happens once we get here is the major question, because this is a pretty developed trend, and it looked like it's pretty mature. So the only question is what happens after we get right here. That's really what I want to know at this point. Okay, let me give you guys stocks that I'm looking at, and then I will give you some pretty cool information and show you how you could trade and completely avoid all this nonsense that's going on. Well, not completely avoid it, but avoid the majority of it. Okay. STX. The target would be right here, the 100-day moving average, okay? Now, some fundamental news for all of you guys. WDC and STX and all the memory stocks are down. Do you guys know why they're down? Do you guys want me to tell you why they're down? They're down not because of the war. They're down because Google came out with some news on Friday that said that they're going to they're making something where they created a new compression technique, and this compression technique this compression technique will help them say basically they don't need as much memory with this.
It's not as memory intensive. Yep.
Intensive. So hey, what do we need? Why do people need to buy memory if there's a new way to compress memory? The problem with that, I don't know. You know, compressing is one thing. We're always going to need more memory, folks. We're always going to need more memory. So to me, this is just a very little, a little hiccup. But again, that's why it's coming down. It's not coming down because it's very important for you guys to right now not throw the baby out with the bathwater. In other words, I don't want you to blame the war on everything that you see. Oh, the stocks are going down because of the war. No, 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 no. Last couple of days, they've been going down because of Meta. And well, I don't know about today. Today, they're not even down, but they've been going down because of Meta. So it's very important to know what the catalyst is. Remember, the one who created the problem is usually the first one to stop creating the problem and reverting. So it's very important to pay attention to these things. But as of Thursday, the war is not what's propelling this market. And that's a very positive sign. Okay, very positive sign. Okay.
So WDC is a short, right?
STX and WDC, but it's the same.
It's the
your
same. That's
yeah,
right.
yeah, yeah. No, not this one, not SNA. Camtech, this one, another one. ALGM. I like this one better than all of the ones I just showed you, by the way. Personally, I like this one the best because it just broke the 200 and the 100, and it was in a nice little compression here, and now it broke down. Oklo. That's beautiful right there. That's a beautiful, and it's one of the few utilities that's actually coming down right now. Most utilities are going up. Let's see, XLU. Yep. That's a good, nice look. Now let me give you the longs. TSN, very nice look on a daily chart. On an intraday chart, it looks like mush. All right. Costco. Starting to look pretty good. Starting to wake up. That's very positive. The fact that Costco is up during war, very positive. Trading above the 50-day line, very positive. FRT. This one's not ready yet. This one needs to trade and hold above the 50. When I put it on my radar, it was trading above the 50, but it's not anymore. It actually has to trade above the 50. So we'll see how it does later today, but that's a nice look. Band, small cap stock. Nice small cap stock. KO, Coca-Cola. Again, same thing as FRT. It's got to actually trade above the 50-day line. Right now, it went there and it bounced down. It has to. That's why if you're looking at a daily and you want to take this stock, for example, hypothetically speaking, you would wait till like the last 15 minutes of the day, and I'm not suggesting you do that, but I'm saying if you do, you want to make sure it's going to close above the 50-day. Remember, you're trading a daily chart. Folks, you know how I always show you the biggest mistakes folks make? One of the biggest mistakes, one of the top 10 mistakes you guys make, you don't wait for the candles to close. You don't, on the 5-minute charts and on the daily charts, you don't wait for the candle to close. You always have to have the candle close. Many, many times actually, if I'm trading with somebody next to me, that's how I'll know they're a beginner right away. They don't wait for the candle to close. Like if this candle is above the VWAP, this is probably going to close below the VWAP, but if this candle is not closed, how do you know it's going to close above the VWAP? You see, you got to wait for it to close if you want to trade off this candle. So I see a lot of you, it's trading above whatever, or, it's trading above. No. You got to, if you're trading off daily, you won't know that this is going to close above or below till the last few minutes of the market close because you're looking at the daily. On an intraday, you're looking at this, but you always got to wait for the candle to close. And one of the just like when I tell you, one of the biggest causes of errors is human error. One of the biggest mistakes you guys make is you don't wait for the candles to close. Okay, make a little note. Wait for the candle to actually close. Okay. NTR. That's an A-line right there. Let's see if it's ready. Nope, not yet. and you got this nasty pullback here with a gap. So if you are gonna take an A line here, which it's not ready for, your target would be right here because there's a lot of resistance right there. Okay. Just trying to teach you guys some goodies while we do this. Another one, and it looks just like NTR. Is it ready yet? Let's see. See, I like this because it gapped up and it held a good portion of the gap, and now it's coming back up. And it's look how well it's defending the 8-day EMA on a closing basis. Closing basis. Okay, let's see if it's ready or not. Nope, not even close. It's got to get somewhere around here. See, if I didn't use the VWAP, I wouldn't know.
You wouldn't know. Yeah.
Even I, in this case, even I wouldn't know. Okay. I would think it would be somewhere around here. I knew it wasn't ready, but I would think it would be somewhere around here. And again, that's why we have the VWAP. That's what we have the VWAP for. TJX. Now, no, TJX. There we go. Now, I'm not in love with this stock, but beggars can't be too choosy right now. It's not that bad of a look. Actually, let me just see something. Yeah, Ross Store doesn't look that great, right? Yeah. TJX. Yeah, TJX is holding the 50-day. It's okay. It's an okay look. Actually, not a bad look for hey Matt, can you see if the options are? No, they're not spread. They're a little too spready for us. I was thinking doing a credit spread here. A little too wide. Okay, that's the stocks on my list. Folks, this is not a time a time to be trading large size. This is not a time to be experimenting with something new. This is not a time to be trying to show everybody how good of a trader you are. This is not the time for that. This is a time to chill and really, really, really like
just be patient. Yeah.
We're in a hurricane right now, and we have to be careful. Notice the kind of stocks I've been trading, very defensive stocks. Very defensive stocks. I haven't been too slow to do trades, but I've been slower to do trades.
Okay.
Right. All right.
Roger,
Yes.
Before we move on, a couple of tickers came up. If we could do a quick look.
Mm-hmm.
Baba
looks like a nice short. My problem with Baba is not really the stock. It's a great stock. The problem is, remember, it's an ADR, so we get the overnight session.
That's right.
It gaps, so it's gappy.
Yep.
So if you understand that, and if you're willing to, use a pretty wide stop, or you're using options, that's okay. But understand it's gappy. But it's a nice short. It's a nice short. A swing. It's a nice swing short. Very nice swing short. Just gappy. And that's just how the stock works.
Okie doke. And the other one was PEP.
Pepsi. Pepsi looks good, but you got the 100, the 50-day right there.
Okay.
So we got a problem. Houston, we have a problem. The other two I showed you actually broke past the 50-day. They just happened to have gone down for the time being, but they actually went above the 50-day. This one hasn't even broken it up yet. So that's a no-no. That's a no-no. Also, one second. Also, you see this high? See this high here? It's lower than this high. So this weakens this. There's a couple of things here. Also, look how long and extended this is. So my point is, I would really, really want this to show me what it's got before doing anything, is my point.
Excellent. So guys, we're not doing a flash session here. There was several people just asked about those two. We're just going to move on now with the rest of the presentation, because you got some exciting stuff to talk to us about, Roger.
I do. So a lot of folks now, what is this a good time to do right now? Well, it's a great time to day trade, and it's a great time to trade indexes. You know why? Because the market's going crazy right now with volatility, and it's a great time to take advantage of it. So I'm going to show you a cool program that takes advantage of the market volatility with very low risk options or E-minis, and I'll talk about that right now. Okay, so let me show you this right now. This is called the AlphaZone Pro right here. You're looking at this dashboard right here, and it only trades one ticker symbol. All right, now you could trade more than one ticker symbol. You could trade the QQQ, you could trade the Russell 2000, You could trade. You could even now you could even trade because they have options on the mega caps. That's new. That started like a month or two ago. You could now trade. You could now trade. Matt, are you going long here?
I'm already long.
How long have you been long for?
About 20 minutes.
Oh, okay. All right. All right. So the cool thing about it is this. You don't have to focus on a million tickers. You can focus on one ticker symbol, and that's the SPY. But what I was saying is now the Meta, the Microsoft, the Intel, they also have every other day options. So theoretically, you could trade those in here too, but I don't recommend this. I recommend trading indexes here. So you're seeing two different screens. This is the screen that you trade when the market is choppy. And this is the screen you trade when the market is really, really moving. The market only moves about 15% of the time. So most of the time, you're trading this side of the fence. And that's the side I'm going to talk about today. So I want you guys to think of this as like, you know how in soccer you have goals, right? You have goals. Well, think of these as the goalies, okay? But in this game, it's not about getting to the goal. It's about the goal getting back to the middle line. It's like opposite goalie. You're sitting at the goal line and you're trying to get into the middle line, if that makes sense. So let me show you what I mean. So you see how we wait for price to get up to one of these three levels or get down to one of these three levels. If price doesn't get up to one of these three levels, we don't do anything. If price doesn't get down to these three levels, we don't do anything. The asset we trade is the SPY. We don't have to trade the SPY. We could trade the MES if we want to, the micro E-minis. And I'll talk about that in a minute. It's exactly the same, same principle, exactly the same principle, except the margin and your money requirement is much less. So let's just go back to SPY. Okay. So the goal is to wait for price to get to one of these three levels and then revert back to the center line, okay? Or get down to one of these three levels and revert back to the center line. This is the center line right here, okay? That's like the big long-term goal. So you could see right here, this is actually, you see how this is actually the profit target. We see this, it's called the cloud. The cloud gives you the profit target right here. The edge of this is the profit target, and this edge is the stop loss. And that's your entry signal. Now, if price is not near one of these three areas, there's nothing for you to do. So if you get an arrow like right here, see how there's an arrow that came right here? There's nothing for you to do. The area you need to worry about is price. The accurate trades are when price is close or beyond one of these areas, okay? So if price is in between these two areas, it's much safer to take a trade than if the price hasn't got to these areas. Now, what are these three areas? What are these three areas? They are different rubber bands, okay? Let me give you an example. So let's say the market trades like this. You know, take a rubber band and, you know, you go out, in, out, in, out, in, okay? So what happens when the rubber band gets to like a level where if it stays that way, 75% of the time, it'll pop. That's level number one. This level, when rubber band gets 90% overstretched, if in other words, if the manufacturer of the rubber band tells you, if you stretch the rubber band to this level, there's a 90% chance, 9 out of 10, it's going to pop. Means coming back to this level. And this is the 90th something percentile, like high 90th percentile. The manufacturer's pretty much telling you, if you take our rubber band and if you pull it apart that much, like it will snap, okay? And that's what you want. You want the rubber band to snap. So these are the levels these are the different three rubber band levels right here. Level 1, level 2, and level 3. Level 1, level 2, and level 3. Okay. And again, when they snap, if it never comes here, it comes here maybe once a year, but it does come here all the time and it comes here almost every day. You could see right there. And usually that's the level we work with. But my point is, the key to this program is it stretches out, it comes back to the level. Is it stretched out enough? Well, what has to happen? So price has to get near one of these levels. That's number one. Okay. As a matter of fact, Raleigh, you know what I'm going to do? I'm going to pull one of my notebook. I'm going to do like a little notebook. Okay.
Okay.
So that way folks can
Quick little document.
yeah. Here. I know folks like when I do these documents. Okay. And I'm going to share it with all of you in a minute. So the first thing is we need price to go to one of the three levels. Okay. Price must go to one of the three levels. Okay. Either bullish or bearish. We don't care. We don't discriminate. One of these three levels or one of these three levels right here. Okay. Then we need a pin bar, aka long hammer bar. So we need, in order for the arrow to signal, the bar has to be a hammer. You see, this is a hammer.
Yep.
That's a hammer. That's a hammer. A hammer is when you have a long wick and a small body, like a lizard type of pattern. Okay. I call it a pin bar. And all of this will be greatly explained with illustrations to you guys in just a few minutes. Okay. But I want to go through this. We need a pin bar. The pin bar must be a 20 bar high or low. Okay. So in order for you to get an arrow, you need to have a specific kind of bar, and the bar has to be a specific shape, and it has to happen at a 20 bar high or a 20 bar low, in addition to being near one of these three levels. Capiche? So far, so good?
Yep.
Do we have any questions so far? Here, I'm going to share this with all of you, because sharing is caring.
Sharing is caring.
That's right. That's right. Here, let me, here, what am I doing here? What am I doing? Oh, here, file.
But what's really nice about this, Roger, is I already know that these conditions that are in here,
Oh,
these
here
are
it is.
things that you have asked for. You
Yeah,
have
these
said,
are, of
these are
course.
the things that are important to me, and the programmers are able to code that for you.
Well, we're not done yet. We're just getting started. I just want to
know
post
it's
this.
going to get juicier.
It always does. All right. And by the way, I have not looked at the chat at once. I just had to open it right now, and I just posted this link so you can all get on this sheet and go. So we
Great.
need the price to go to one of these three levels, right? Matt, we took those labels off because they were blocking the screen. Likely move, probable move, and max move, right?
Correct.
Max move. See, I even remember it. That's the labels you guys have. Probable move, likely move, and max move, okay? Then you need a pin bar, and then the pin bar must be a 20 bar high or low. All right. All right. So we got a couple of hundred people in the room. Yeah, we got 4, and we got 34 people on this thing. I'll give this to you. I mean, you can have this, okay? Then we need the oscillator. Now, this oscillator is called the Master Blaster of Disaster Oscillator. That really is the name, Master Blaster of Disaster. You see, one of the benefits of being the
creator,
the head trader is I get to name things any name I want, and nobody's going to argue with me. So it's called Master Black. Here's what happened. Lance came up with an indicator called the Master Indicator like 6 years ago, or I don't know, years ago. And I really liked the name. And I said, well, Matt, and I was joking around. I said, I'm going to come up with the Master Blaster of Disaster. And everybody started laughing. So I said, you know what? That's a good name. I'm going to keep it that name. So it's the Master Blaster of Disaster Oscillator. All right. I just thought it was funny. That's all. Nothing to do with his tool at all. So, and the master oscillator, the oscillator has to confirm what we're seeing here. In other words, if we get a green arrow, we want the oscillator to start moving up. If we get a red arrow up on top here, let me see if I could find you a red arrow. No, not a lot of red arrows. Look at that. If we get a red arrow, we would want the oscillator to start coming down. In other words, if we get a green arrow, we don't want the price to be here coming down, right? We want it coming up. And this oscillator, so here's what I did. I created this oscillator. It doesn't have any divergence in it at all. There's no divergence in here at all. When you take divergence away from an oscillator, okay, the lag goes away. So there's not a lot of lag here. Now, some of you like to read histograms. Some of you like your old school. You like the RSI, the MACD, the stochastic. Your old school, you like the regular oscillator. There is absolutely no functional difference between this and this. It does not exist. The only difference is this uses histogram and this uses the levels. I'm a level kind of guy. I know some people are colorblind. They like levels. I'm not, but some people are. But you can use this. So when you start seeing price at the bottom, so if you get an arrow right here, basically you want price to start coming up. If you get a red arrow here like this, you want price just like it is right here, except we didn't get a green arrow and this was too early in the day. But my point is, when you're shorting, you want price to be coming down from here, and you want to go long, you want price to go here. Typically, the oscillator is a confirmation. So let me put that in the doc. The oscillator is used as a confirmation filter. When you get a green arrow, you want the oscillator coming up from the bottom. And when you get a red arrow, you want the oscillator to come down from the top. See, at least I know how to type. They taught me that in 8th grade. I know it's weird. It's weird. Had to watch a video to how to cut a cantaloupe.
Cut an cantaloupe.
Ah, the things I tell you, the things that I share here. Okay, so is this helpful to anyone? This doc, is this helpful to people? Kind of gives you the steps that we're doing so far?
Yep.
And it gives you like a little roadmap. Is this useful? Okay, cool. All right. By the way, Matt, just FYI, relative strength on SMH has been going up all day and across the end. Here, let me show you what I'm looking at right now. Look at this. NASDAQ. Tech has been getting stronger as the day goes on. Okay. My point is the market's not getting weaker right now. Okay, back to our drawing board. So just to review, we wait for price. Price is doing nothing right now. We wait for price like right here to go crazy. Here it went crazy. Here, and a lot of times it oscillates. When it oscillates, we wait for it to get to one of these three levels. We wait for it to get to one of these three levels and for this arrow. And if the arrow comes before we get to these three levels, we don't do anything. Now, the arrow will not appear unless it's a pin bar. So you don't have to look for a pin bar. The arrow will do that itself. You don't have to wait for a 20 bar high or low. The program will do it itself. All you got to make sure is that the arrow and the price is near one of these levels. That's all you got to do. And I'm not kidding. That's all you got to do, like right here or even right here. I mean, this isn't great, but it's close enough to one of these levels, okay? Or beyond one of those levels. That means the rubber band is telling us that price is, in fact, stretching to a point where it needs to revert, okay? When the arrow appears, it'll give you a profit target. Here. The arrow will accompany a cloud which will give you a profit target and a stop loss. Okay. Now, what assets can you use to trade this program? Well, you could use SPY options. Well, first of all, if you have a huge account, you can use SPY, just the SPY ETF. I do it all the time. If you have a smaller account, you can use at the money SPY calls and puts. Typical price for a one day expiration is $300. Let me show you. Oops. Look. Where's SPY right now? 635 and a half. Okay, 635 and a half. Oh, they don't even have them at, they only have, that's kind of weird, Matt. They don't even have half points. Look at that. Because price is so volatile. Okay, so we go 636 right here. 110 for today's expiration, 358 for tomorrow's expiration. If it's early in the, let's continue our, if it's before lunch, you can do same day expiration. If it's after lunch, you can do next day expiration. Clyde always does next day expiration, and Matt sticks to the rules above. Pish, strike price is always closest strike price to the underlying asset, aka if SPY is at 656, you would here. If SPY is at 655.75, you do the 656 calls. If SPY is at 655.40, you do the 655 calls. If you get it wrong, if you get above wrong, nothing will happen either. If you mix up, mix up. Okay. If you mix this up, that's okay too. I won't tell any. I won't tell on you. Okay. Okay. Let's see. Now, what if I have a tiny account that does not allow day trading? Less than 25K in account, right? Well, I'm hoping, Raleigh, that me laying it out like this before I do the class will help people really understand what we're talking about.
This is, you started doing this a couple of weeks ago, Roger. This is like talking points, and this is perfect. This is wonderful.
Okay, good. Because there's a lot to cover, so
yeah.
So I want to make sure you guys have it. So let's say you have a small account, and I know that each one of you, the people who are really interested in this, at least I'm covering one or two of questions you guys have. And again, please tell me if you have other questions that I'm not covering, or to Raleigh, and then he'll tell me. He'll talk to my people, and my people will talk to his people. And Clyde will talk to them, and he'll pass it on to me.
Yes, and we'll pull Pakistan into it, and we'll have a meeting. Sorry.
Oh boy. All right. So if you have less than 25K, you can trade E-minis, ticker MES, or bigger one is ES. Okay. So look. Yeah. That's the SPY right there. That's the SPY right here. Okay. Here. Let me show you something. Now look at here. Okay, now look. That's that right here. Oh. What's going on here? Why does it look so different? It's the same. We're looking at exactly the same thing. It's weird. Oh, because of these lines. Okay, I got it. I got it. Now let me go back to it. Okay, I got it. Here, let me show you on a different chart right here. Okay. You guys you're gonna like this. I promise. Okay. See this right here? See that right there?
A big candle. Yep.
See that right there? See that right there? See how we're coming down the last 5 bars? See how price is identical? Look, there's that big move in the morning that we had. There's the consolidation. There's the 2 bars that break down right here. There's the upside. You see how MES and SPY are identical?
Mm-hmm.
The only difference is this has 3 digits and this has 4 digits. So let me show you how this works. To trade this, you need to have $50 day trading margin. MES and ES, MES $5 per point, ES $50 per point. Okay? Day trading margin for MES with a futures broker is $50. Day trading margin for ES with futures broker is $500. Stock brokers do not accept day trading margin for futures. So your margin will be overnight margin unless you are with a futures broker. Example, Think or Swim overnight margin for MES is $2,500. Think or Swim overnight margin for ES is $25,000. Future, neither stockbroker nor futures broker has 25K margin requirement to day trade MES or ES. How many people are watching? Oh, 66 people. Good. Now, what did I just explain to you? So listen and listen good. Okay. So what that means is most of you trade this one. If you were to trade this one, whether you traded with a stockbroker or a commodity broker, futures commodity, same thing. The margin is this, you don't have to have $25,000.
Right.
Okay. So for example, see 6445, 6450, that's 5 points. Okay. MES $5 per point. Okay. So again, from 640 to 645, you see this right here? If you're trading the micro E mini, that's $25. If you're trading the ES, that's $250 because it's $50 a point. Back in the day, it was $500 a point when I started trading. Now it's $5 a point. Margin for that is $40 or $50 with a commodity broker. Let me give you an example. I'm just going to show you a couple real quick, okay? and futures. This is just I'm just showing you the biggest ones, okay? Micro E mini margins, $40. $100 to open an account. You see, there's no $25,000 to day trade this. So you could use AlphaZone Pro to trade E-minis with $40 E-mini margins. Ninja Trader, it's $50 here.
And by the way, guys, these are intraday margins.
Yes,
And
intraday margins.
You're looking at futures that you do not hold them overnight. Otherwise, your margin goes up 10 times, and it's not worth the risk.
So, for example, let's go back to my sheet. Go back to my sheet. Where's my sheet? Oh, right here. Stockbrokers do not accept day trading margin. You got to go to a futures broker for that. Here's your future broker. Day trading margin for futures brokers, $50. Day trading margin for ES, $500. Peace. It's right here. I'm not making this up. So you don't need $25,000 to do this. Okay, you can open up a cash account, or you could do it that way. But my point is, you don't need to have all these requirements that you think you do. So now let me, and I haven't even gotten into market internals. I'm going to do that tomorrow. But let me just review this with you real quick, okay? So, what is AlphaZone Pro here? What is AlphaZone Pro? It's a tool to day trade indexes. Okay, S&P 500. You can trade the SPY or E-mini. Okay. Now, how do you do it? Let me go back to my... I'm determined to explain this to you guys today so you will understand. Yeah, look, we're getting a bullish signal right here. So 3 levels. Price goes to one of these 3 levels. You get the arrow. The arrow tells you to go long or to go short. Okay. In order for the arrow to appear, it has to be a very specific kind of pattern. And then the pattern has to be a 20 bar high or low. The arrow then accompanies a cloud, giving you your entry and giving you your profit target, unless you want to just wait for the halfway line. That's up to you. That's the second one. Okay. The arrow will give you all of that. The Master Blaster Oscillator, I'm just going down this list. The Master Blaster Oscillator is your confirmation filter for all of this. So when you get a green arrow and you want the oscillator to be coming up, when you get a red arrow, you want the oscillator to be coming down. I'm really hoping that you could trade futures with any stockbroker except Fidelity. But again, you're going to be, stockbrokers do not have day trading. Stockbrokers do not accept day trading margin. Capiche? So your margin will be higher. So if you have money with them, but you don't have 25K, you're good to go. You can just trade them.
Yep.
Yeah, you're good to go. Let me continue. So Master Blaster Oscillator right here confirms the move, okay? When you get a green bar, you want this to be coming up. You obviously don't want to get a green bar with this up here. You want it to be coming up, and you want to get the red. You want to get it coming down, okay? The oscillator is a confirmation. You don't trade the oscillator. Use it as a confirmation, okay? What assets do you trade? Well, you've got choices. You could trade SPY. You could trade SPY options, okay? Calls or puts right here. That's what a lot of folks trade. I would say a lot right here. Here's your SPY. Here's your SPY right here. Here they are, right there. Okay. You could trade them. Go back to the platform. Back to our list. I'm hoping that since there's so much stuff that this list is keeping you organized. Mark, your answers and everybody who's asking me questions, every one of your answers is right here. Literally right here. There is no $25,000 for margin because it's not a stock. So you're day trading, this whole $25,000, folks, it only applies to stock and stock products. A futures is not a stock product. Hence, the $25,000 doesn't apply. SEC has nothing to do with it. Capiche? All right, let me continue. And I've explained it all right here. Neither stockbroker nor futures broker has 25 margin requirement to day trade MES or ES. I mean, I put it in bold letters right here. The only difference if you do it at a stockbroker and all of them trade it is your margin's going to be bigger. But you could still trade. You could still trade to your heart's desire. It's still $2,500, not $25,000. Okay. Let's continue. Let's continue. If you want to trade the S&P 500 options, God bless you. I teach you how to do that. It's right here. Right here. If you don't want to, if you don't have $25,000 or you don't want any decay because there's no decay, you know how the options decay? There's no decay with E-minis. MES, $5 a point. ES, $50 a point. Day trading margin at a futures broker is going to be $50 or $40. Overnight margin is going to be $2,500. Stockbrokers will charge you the full overnight margin, whether you day trade or not. That's the only difference between a stockbroker and a futures broker when it comes to E-minis. Pish? I trade them in my Roth account all the time. You know, you could have a futures a Roth in a futures account too. Did you guys know that?
Yep.
Mm-hmm. So it's all laid out for you right here. Your margin requirements. These are very general rules that will answer each and every one of your questions, and I went over them with you. Now, I'm about to have a webinar explaining. Well, why don't I just opened the chat? Well, why don't you tell us, what Billy, what Robinhood told you?
No, let's not go there, Roger. Seriously.
I mean,
you know, let's not hijack what we got going on here.
No. I mean, I've been doing this for 32 years now. Okay. And I started out as a futures broker, so I think I would know, you know. Mm-hmm. You would think, right? Okay. So,
Roger, let me just step in just for a second. For those of you that are following us on YouTube, we're about to stop the YouTube stream. So for the second part of today's presentation, you need to come into the Zoom room to see it.